Platinum miner Royal Bafokeng's first half diluted earnings per share fell just over 20% to 105 cents as operating costs continue to remain a key challenge for growth. We now cross to the JSE, where the company's CEO Steve Phiri is standing by to drill into those numbers. Thanks so much, Steve, for joining us this afternoon. Well, as I said, we've had earnings per share down just over 20% to 105 cents. Again, operating costs coming to bear here, but revenue for the period did rise 52%. So run us through the half year that was for the company, where 2011 has been labelled a year of consolidation for the company.
Thanks very much for having me. Yes, we said that 2011 is a year of consolidation, having taken over from Anglo Platinum during the beginning of 2010. We are not disappointed, actually. We are not unhappy with the results. We could have done better, of course, if it was not for challenging operating environment during the first half of the year. During the first quarter particularly, it was really quite bad with safety-related stoppages. As if it was not enough, we had an accident where our conveyor belt, which hoists material up but also conveys people down to the shaft, snapped, and we had a stand down of about 10 days, which also affected production. Invariably, if you don't produce, your costs remain, get high because of your fixed costs, being 60% of our operating costs. However, we are happy that we managed to keep our ounces profile flat, even though the costs went up by, in normalized terms, 9%, but 14% because of also other extraordinary items, ones of optimization project costs, as well as escalation of costs related to unusual Section 54 stoppages. Yes.
Well, of course, on that cost front, I mean, you've got to consider the fact that we've seen the conclusion of a 3-year wage agreement. Does that at least offer you some stability moving forward? Because there seems to be interesting resolution that's come to the table on that front, which includes in principle that some aspects of remuneration are going to be linked to performance, and that's certainly a unique feature for the platinum industry.
Absolutely. It gives us respite. It gives us more chance to stabilize our operations, to get the team working together in one direction. And we are happy to say that the union, the National Union of Mine Workers, have come to the party to declare their commitment to make sure that we achieve the crew efficiencies that will help us to optimize the asset. Absolutely, yes. That gives stability as well as security of tenure in that regard. And it allows for planning.
Let's hone in on production, because production, as you say, has been holding steady with the expectation that full year levels will be comparative with those from last year as well. But you also emphasize that you've reported a good progress at your Stale Drift project. That's a project that you were planning to build up by 2017. So what warrants the statement good progress? What kind of development are we seeing on that front?
You mean on Stale Drift?
Yes.
Stale Drift is progressing quite well. We concluded our pre-sink in the end of April this year and converted to full sink for 6 weeks up to somewhere in July, and we started with full sink. Full sink will invariably start a bit slowly because you want to make certain that you've got all your ducks on the row. We're picking up meters now. We anticipate that we'll be able to do 3 to 3.5 meters per day. And Stale Drift is 2 months ahead of project. We, at the moment, have a declared saving real of 233 million rands now, which is quite banked. It's doing quite well. On completion, Stale Drift will more than double the output of Royal Bafokeng Platinum, and we are excited.
Of course, that saving aside, we've got Bushcopy anticipated to fund at least 50% of that Stale Drift project. You're looking at a balance sheet, though, that's looking relatively ungeared with healthy cash and near cash position of 1.29 billion. So what are your capex plans moving forward? Well,
Stale Drift remains the main capital hungry project. As I said, we are at about 25% of the project, and it's an 11.8 billion rand project. With this declared saving, it's slightly less than that, and we anticipate that we will be doing a saving. So So for this year, we anticipate that we will be spending around about 1.6 billion rand in overall capex, including Stellreft as well as Boschkopi Phase 2, and Phase 3, which are replacement projects. So we've got a capital program which is includes Boschkopi too, because we need to continue with development in Boschkopi. Yeah.
Of course, that pertaining to organic growth. At your time of listing, though, you had emphasized that you would be pursuing growth via a combination of organic and acquisitive growth strategy. Is there any acquisitive plan on the table?
At this stage, it's only on concept basis, because our main priority is Stellreft. We need to bank Stellreft, and we're moving in that direction. But we're not closing our eyes towards other acquisitions in a form of an M&A or any consolidation or cooperation. But we're still casting our net quite wide in that regard. But we are still at concept stages. But there's nothing concrete that we could be reporting at this stage.
Well, Steve, in your remarks today, you say that you remain optimistic about the outlook for the platinum group metal market in the medium to long term. Are you confident in your ability to cater to that demand?
Absolutely, we are. I mean, having survived the first half of the year, those difficult and challenging environments, operating environments, we are confident. I think we have turned a corner. We can promise the shareholders that we are up to the task unless unforeseen circumstances happen. Well, but we are very optimistic.